And now, to share with us his technical view on the local market, let's all welcome COL Chief Technical Analyst, Mr. Juanis Barredo.
Right, good morning, everybody. Anyway, nice to see a lot of you. I was a bit surprised, despite the market conditions, that many of you seem to be on your toes and ready for action. And last time we managed to be able to talk to many of you, we were really warning that there was a potential situation that could come out, that the markets could display some degree of choppiness. And we'd like to be able to talk about what that would mean, because it's not finished yet, but I hope that maybe in due time, hopefully before the year ends, that we could see the end result of this corrective movement and turn that into an opportune moment to be able to act accordingly, particularly for those active investors. Now, when we did looking at the market in the first half, things were looking quite rosy. If you can see from the graphs on your sides, the Philippines was up at about maybe 7.1% on the first half. And if you look at the other markets, they did kind of well. Even the US did well, China did well, Europe was also doing well. Until the second half, this is what happened. And you've seen a lot of them start to retrace a lot of these valuations. And at least the Philippines wasn't so bad compared to the rest. So if you're feeling pain here, can you imagine what they're feeling in different other countries like Thailand, Singapore? But I think that shows a little bit of restraint in our ability to come down, although it's very hard not to be able to do that with the positions that we've seen so far. When we talked to you last, in our last market outlook, these were the particular points that I brought to many of you, and we said that the PSE, after coming from about 8,400, would again need to be able to nest into another corrective swing, expect zigzags to come in, and we did see that. We also said that we really hope that the market could stay above 7,920. Unfortunately, that did not happen. And I said the base case until we talk again would be about 7,750. That level has held so far so good. But it doesn't mean we're out of the woods, because we're kind of near that spot right now. And again, we're going to have to watch that threshold very closely. And if that particular support structure breaks, as I will show to you in a little while, it might cause a little bit more agitation into the selling. Now, instead of getting emotional if something like that were to happen, I think it's time you open your eyes for the opportunity that things like this will bring about. It happens every so often, and as major markets correct, the tail end of a selling impact sometimes can be a bit more emotional, but that's when you will see some flash movements, and you will see the ability to be able to buy stocks at good valuations will obviously come back. And for the meantime, we will keep our progress on an 8,600, but right now I'll show you that the next resistance for our market is about 8,000. We still have to break through that before we go back to our 8.6 target range. Okay, so I'll tell you why I'm a bit on an edge, because if you're looking at the chart you have beside you, the major uptrend line for our particular index is currently under test. If you notice the picture that you see, and you see this extended blue line, prices right now are right below it. Now, the 7,750 line is standing right here, this horizontal line you see here, and I will continue to maintain that as a very important support structure for us. Although it did break that maybe about a month or a month and a half ago, but only slightly. It went back to about 7,620. So that 7,750 to 7,620 are the pretty much essential support areas that we really have to watch very closely of. Now, what could happen? Now, in the ability for the market to extend or to finish off its corrective wave, we normally follow that on major corrections. There normally is 3 swings that would normally try to describe a corrective condition. We call this an Elliott wave ABC swing. And I've labeled the letters there on your side, you will see. We have an A wave with this first big decline we've seen from that big decline to this. Then we had a bit of a rally, which is the B wave. And we've broken that since, so it's quite possible we're into a C wave right now, the beginning portions of one. Now, there's 2 ways to execute this. If our market is weak, then a very full-fledged C wave could actually expose itself. And that would mean that you would have a C wave like this, carry prices down, maybe even break the previous low you have there, maybe stretch out a little bit more, and that be the end of the situation. It sounds good, but it's a little, it can be a bit exciting for those people holding positions because you're probably wondering what's about to happen. But remember, coming towards this is the tail end of the selling wave. Okay, so I think April cautioned you earlier, you don't want to be selling stocks when you see ridiculous valuations come out already. In fact, if you still have the ability to be able to put some money into those particular stocks, those particular nice prices may be coming out soon, so you have to be a bit ready for that. Now, I think April also talked about that India managed to do something quite untoward the rest of Asia. Their market actually shot up. Now, I wish we could do something of the sort, but if it can, and if you're lucky enough, then the second scenario you see there, the one you see on your right side, is a possible potential. So the pullback we're seeing right now of the market could come closer to the low, but hold off from breaking that and attempt to be able to rally itself quite strongly. Now, I'm a bit more reluctant to give that second scenario as of today because I've been seeing a lot of poor volume flows into the market, and that means attention in our direction is actually quite slighted. Now, perhaps they're waiting for more catalysts. I hope what the central bank did can generate more activity in terms of unleashing more capital into our markets, and that remains to be seen, and I hope we can see that perhaps after the September month. Okay, so if a full-fledged C wave comes out, what normally happens? So normally the measurement that we do is we will look at the size of the A wave. In other words, as prices fell from this high area to the low end, this being the A wave, we normally try to get a measurement of that height. And that particular height, we try to be able to replicate as a potential C wave. And that being the worst end. It could be slower. And hopefully that's the case. But something you have to prepare for is that the potential for your index is to be able to slide down like this. If so, then just by the measurement alone, it could tag somewhere within the realms of 7,370, as I pointed out in that area. Okay, so maybe from that ballpark area, or maybe if it's slightly lower, those are already good levels for you guys to start watching out for. Now, the chart on your right side is a much longer-term chart of your Philippine index. So in answer to the question, are we still in a bull market? The answer to that, if you look at that main big trend you see there, is yes, because our market is still trending up. Now, what may happen though, that instead of a very aggressive and channeling upward situation, you might see a slowdown coming into that. So instead of very forceful advance, it might start to curb and go sideways first. That might give time for, hopefully, the fundamentals to kick in and to be able to generate more support for the market later on. That low point of that chart on the right side is at 7,140. So that being said, since the last time I said the base case would be about 7,750, I will have to reduce my base case for the meantime, hopefully up to the next 6 months, and use that as a maximum decline threshold for us. But I will maintain our trading range for the meantime because the opportunity for the market to rally will still be there. So yesterday, we had the market come down about 77 points, and that only formally breaks its presence below all the essential moving averages that we follow. And normally, that tends to unleash some pressure as well. So again, in the short term, we do expect some weakness out of this. I think it's very evident, and so we might really have to be able to keep ourselves sideways poised in a very big range for the meantime, with 8,000 being the immediate resistance zone, and only after a break of that do we even have the ability to climb back higher. Now, I'll show you just snapshots of some mainline index stocks. And the reason I'm going to show this to you is just to be able to corroborate what the index is telling us. And you see here very, very weak technical conditions of the following charts. I have there AGI, DMC, Globe, GTCAP, ICTS, Jollibee. So these just examples, you can see very clear declining trends. Some of them have made interim small patterns after a decline and them breaking down again. And that only tells us that there is more to be seen into this corrective flow. And that means that you have to reduce your aggressiveness for the meantime and allow this C wave to be able to take itself over. Here's another set of index stocks. You have Metrobank, you have Megaworld, you have Pure Gold, you have Robinson's Land, Semirara, and you have URC. I've only put the ones that look the weakest. It doesn't mean the ones I did not include look strong. So that means there's still quite a number of them that are still quite vulnerable to the selling activity, and that means that we still have to be a bit careful of that. So how do we take advantage of a C wave? What does a C wave look like, and what does a C wave feel like? C waves are usually taken out of emotion and frustration, maybe because prices have not been cooperative to climb for a very long while now. People are getting frustrated by trying to hold on to their positions. And it's because of that that some people start to sell. Some people might be saying, wow, if it's so cheap, how come it doesn't rally already? And you still see prices coming down. And so you can just imagine how frustrating that is for individuals who are holding those stock positions. And that contributes, especially if they see up to this point that it continues to be relatively soft. So what happens is you have an agitated decline out of that frustration. People are not selling anymore because they're worried about something. They're just selling because they're feeling frustrated, right? Instead of starting to look at the values that these things will eventually bring open. And so in this capacity, I put the chart of PLDT there on the right side. And I went back in history so you could see what a typical heavy swing down could be. I did this, I just magnified the decline so I can just show to you what the potential opportunities can be from something like this in terms of buying into the trading rebound. So if you see what happened to PLDT, it started off in the first decline, very aggressive swing, made a small little pattern here, and then you just see prices fall down relatively rapidly. Now, of course, the scary thing is it's quite wide, but the good thing is it only lasts for a very short while. And so when you see that agitated selling coming in, this is where you're going to have to use perhaps maybe a programmed gradual buy methodology to get yourself in, and you take advantage of this heaviness in the selling. Now you might ask, when should I start doing it? Well, you can use two indications to do that. First, you can use a very clear set. Look at your RSI values. If you see RSI values go below 30% or 20%, this shows you very heavy oversold conditions, and the potential for a whip back can be quite good. The second thing you also want to have a look at is, look at the distance between where prices are as compared to the moving averages that stand above them. If the distance is very far already, that means that if you start accumulating at those zones, your upside is quite big. And that means that there is ability for this to rebound well, and you will get a lot of people eventually buying this. Now, why do I want to focus on issues like, of course, big caps like this and maybe not small caps? Because when things start to go crazy or aggressiveness in terms of decline, the first thing people want to do is move back into that degree of safety. And they will feel more of that buying index names rather than being into very tiny names whose liquidity can be a very big problem. And so be watchful of your popular index names, but I'll talk about something that I want you guys to also be quite mindful of. So let's just stand by and look at other markets first. So let's look at the US, dollar, oil. Let's have a look at other things that might raise some concern for us. In the US market, we've seen the market rally also quite a bit since falling down from its 200-day moving average. And we're now near the previous high. And we've already been seeing some pressure in the last couple of weeks. And it looks like the US may need to also deliver some sort of corrective movements. Because of that, and if we do see more agitated declines, it could affect other markets to do the same thing. In terms of the dollar, not too much change in here. We've been looking at a basic uptrend for the dollar. It continues to maintain that. It actually broke out of an aggressive channel, but it whipped back right away. So perhaps continue on. And I think until the last low is broken, I don't think we'll see too much change here just yet. But we'll keep track on it because I do detect some loss in momentum. In terms of the peso managed to be able to recover back to the upper bounds of this channel I was looking at. It hit it, if you notice there is sometimes it breaches it just above or below only for a short while, but then it recomposes it back itself into the channel. And I will continue to maintain the position of that. So a major resistance point for that would be about 52.50. As long as your peso rate stays there or lower, we should be okay to maintain that particular trend angle for the meantime. So not so much threat from there yet. Then we have oil prices. Now, I know there was that very exciting event that happened about a week and a half ago, where, of course, there was an attack on a Saudi facility. And because of that, oil prices just blew up on the upside. But if you notice the movement of oil right now, oil prices are actually back below the areas even before that place was attacked. So it looks like the normalization of the supply lines have managed to be able to take place. And again, we don't see too much upside for that possibility in oil. Again, probably just stay sideways for the meantime. But unless something a bit more crazy happens into the Saudi Arabian front with regards to any other issues, I think you probably see oil continue to stay within a consolidating band. Those people who've been watching gold and nickel prices in terms of some mining company opportunities, gold continues to remain quite strong. However, I think it's gone up a bit too fast and needs some more winding time. I don't think that this will probably come down by a very big amount, because by the MACD look of this, it looks like it's coming closer to the end of the corrective move. Maybe a little bit more downside, but very, very little. Then after that, it might try to make another attempt. Nickel prices are the same. It also went up very quickly, so a little consolidation time is also necessary for this particular commodity. I would anticipate that those local mining companies following them would probably behave in the same fashion. So if some of you are looking for things like Nickel Asia, FNI, some of the nickel companies, do expect a little bit more wind-ups or some pullbacks, but I think there might be action coming in again later. With regard to other markets, I think right now, it's really only Indonesia's market who looks quite resembling to ours, but others have been quite diverse. They've been getting quite different types of movements, so Asia's not building me a picture that looks exactly the same. And that means we're probably running on our own steam. Now, if you see the picture on the lower right-hand side, that is India's chart, and you can see it jumped up very quickly after a potential breakdown condition. I really wish we could imitate that, but I'm keeping my fingers crossed, because I think we really need a strong prayer to be able to imitate that type of launch pad. For now, I think there's a possibility that we could come closer to the previous low, so we really have to be able to be watchful of potential C wave. So in summary for that, I think that the PSE's corrective pressure will continue into the short term. I've had to be able to narrow off the objectives that we have for the meantime, because as this thing is undertaking itself, there is a potential for that C wave to complete itself. And that's not surprising. We talked about that since the first time we did this outlook in the early part of this year. We're just running through that particular context of the rest of it. The only problem we have is if that 7,750 to 7,620 range breaks. Because if that breaks, then I'm going to tone down the medium-term trend. And after that, I will write you a new report to give you an idea of what is to be expected if such a thing happens. US and Europe may contribute to some weakness, especially if we start seeing corrections, because Europe's in a high band, so is the US, and there are potential profit-taking swings that can still be extolled from them. But after this C wave, I hope you realize that this will be the tail end of the selling. Yes, there might be some agitation, but please, this is what the opportunities that some of us are waiting for. And what would justify why people would be buying a market that so far has, a little bit lacking of some catalysts. But I think April pointed out there's still quite a number of fundamentals backing up in our favor, with like low rates. You've got still good low PE bands to be able to look for. So that means that we have to be able to tie in on what the promise of those fundamental factors look in. And we'll just use the technicals to prepare for the advantageous entries that we'll be looking at later. Like I said there, unburdened index names is what you guys should be looking at. You might be asking, what does that mean, unburdened? There are some index stocks that may have some news about them. And because of that, that is creating a lot of pressure into the company. As for the case, for example, Jollibee, something new took place with the company. It needs time to swallow that reality into the full effects of what they're doing, and that's the reason why it's been staying into an extended decline. Some of you have been wondering how come some property issues have been breaking down recently. Well, recently we've also had some Pogo mania threats that came in. That didn't put a good taste in people's mouths. And I guess people are just being a bit more defensive because they don't want to open themselves to a very heavy risk on something that could still be volatile, right? So choose the names well, but I still think that you will have a lot of index companies that you can come around to be able to look for when this particular rally comes inside. Stay with them first because that's where people have good confidence. The volumes will come into those issues first, and after they rally, maybe your second, third liners may follow suit in that venture later, and then you can always switch your money later on when that happens. So with that, hope that I've managed to be able to give you a good expectation of what's to happen, hopefully into the short term. It looks like that may happen before the Christmas period, so please keep your eyes open, and hopefully we can take advantage of this next big opportunity. Thank you very much.